And our first speaker is Daniel Rodriguez from CRU Group, and he'll give us an overview of the market, which I'm sure is a very interesting and topical subject for all of us. Daniel has over 20 years experience in market intelligence across the energy and mining sector. His core competencies include business intelligence services, data analytics, and embedded content management. Daniel is an Asia-Pacific market specialist with years of experience across the region, from managing market entry strategies to managing strategic global companies. Prior to joining CRU, Daniel was instrumental in the growth and scale for IHS Markit and S&P Global in their Asia-Pacific businesses. He brings extensive multi-commodity experience in financial analysis, carbon emission accounting, and end market positioning for mining companies through complex value chains. Please welcome Daniel.
Excellent. Well, good morning, everyone. Thank you very much for the opportunity to speak today. And the goal here is to really hopefully set the scene around the nickel industry, obviously what's happening today, and where we see nickel going in the future. We certainly know it's a buzz commodity, that's for sure. And we within CRU think it is one of the, obviously the most complex, or one of the more complex commodities that we cover, but obviously one that has an extremely bright future. I'll just skip through. So, the goal today, I'm going to try and unpack this into parts. I'm going to speak about costs. I'm going to talk about production of projects. I want to highlight some of the regional analysis that we cover, because we do see Asia-Pacific being a significant influencer, certainly in the global landscape of nickel. And more importantly, I want to touch on our forecast and outlook for nickel, but I'm going to put that in the context around nickel sulfate. So just quickly around CRU. So CRU is a privately owned organisation based out of London, a 50-year-old commodity economics research firm. So we cover about 45 commodities on an ongoing regular basis. And if you look on the screen there, we have been covering nickel from 1981. Predominantly that started from our expertise in the steel value chain. Just touching on our consulting business for a second. So we do support governments and also producers and manufacturers in understanding the complex supply chains when it comes to things like critical minerals, and certainly, as the Minister mentioned today, around where to play within the downstream sector in this particular space, and that's a lot of the work that our consulting group does. So again, touching on some of the comments that we heard this morning around energy transition, I want to set the scene here a little bit around the boom that we've certainly had in the commodity industry and the year-on-year exponential growth that we've seen. So there have been a lot of factors that have come into play here, which is certainly contributing to the increase in these commodity prices. But if we do turn our attention, to nickel for a moment, we see unprecedented growth in nickel. And obviously earlier this year, we're all familiar with the LME price spike, but this took nickel to the 90th percentile on the CRU cash cost curve. So again, just touching on the energy transition piece for a moment, we consider the longer term impacts of energy transition and the demand on the critical minerals and some of the bottlenecks that we're seeing today. So we certainly do see that geopolitics is playing a much greater role than I'd say we'd previously seen, specifically in the energy complex mix. It's not just the war in Ukraine, nor the sanctions, it's also the dominance of China in this specific industry. And the transition of energy as we seek to electrify transport, reduce direct gas use, increase grid load from solar and wind power, it all requires more critical minerals, and obviously nickel sits in there. So when we look at the periodic table at the commodities that are required to support a low carbon future and energy transition away from coal, oil and gas, it places a great deal of risk in the smaller commodities. And some of these markets are in short supply or have processing risk and or political risk. So copper, nickel, cobalt and rare earths are especially at risk, and we see as they have limited options for substitutions, and there are constraints either through geology or through processing constraints. So let's move on to nickel. So it's a complex process. So nickel products are divided into two classes. We have class 1 nickel products that are highly pure, refined nickel metal and nickel chemicals. Most importantly, nickel sulfate, which is going into the production of batteries. This is a distinct difference from class 2 nickel, which is predominantly in iron, nickel ferroalloys and NPI, which are suitable for use in the stainless steel industry. So let's have a look at nickel supply. Nickel usually occurs in the combination of nickel and cobalt across sulfide ores and laterite ores. Nickel pig iron currently dominates supply, as you can see in the global cost curve, but we see this mix changes in the future as we see the demand mix change in the forecast period. NPI is a low-grade ferronickel invented by China as a cheaper alternative to pure nickel for the production of stainless steel triggered by high nickel prices. The production process of nickel pig iron utilises laterite nickel ores instead of pure nickel sold on the world market. So let's fast forward to the current state of nickel today. Nickel costs, in line with a lot of other costs that we've seen, have significantly increased this year due to inflation. So we've seen a 60% year-on-year increase noted across the whole industry, and that's across all nickel products. These are the highest levels that we've seen since 2007. So energy costs are contributing to that, metal costs also. Emissions is certainly an area that we've invested quite heavily in, and so we do see nickel making emissions headlines, specifically when it comes to CBAM. And it's a top topic with any conversation that I have with customers today. So our cost outcomes outlines the conversion cost differences and emphasises that despite growing cost competitiveness, the NPI to nickel sulfate conversion is still the most emissions intensive way to obtain battery class nickel. So breaking down this cost just a little bit further, we've separated our costs into two types. On the left-hand side of the slide, we can see that concentrate miners were the least affected, with PGMs being the #1 byproduct credit for those at the bottom of the cost curve. What we can see within our 2026 increased costs is due to the drop of the PGM price. Power prices, as I mentioned earlier, have also contributed to these prices. Turning our attention to the right-hand side of the slide, for H-Power sites, cobalt byproduct credits have significantly offset the 15% site cost increase for H-Power type operations. In 2022, we saw the ramp up of H-Power plants in Indonesia, showing costs higher than we'd expected once they were fully operational. So moving on from our current costs and just taking a look at our forecasted production profile, producing countries that we see, whilst we see growth from Australia as an example, and that's running off a smaller base, we certainly see the dominance of the nickel production story is certainly an Indonesian story. Furthermore, if we look at our long-term production forecast, we can see that Asia still remains the #1 contributor to nickel projects within our pipeline and our forecast. North America is second, and it's an estimated production capacity, but with a lower grade, and that's important to note. So just looking at our nickel production outlook, if we break down the production outlook by grade and ore type, we can see some differences. If you look at the left-hand side of the slide, you can see that nickel laterite grades are harder to estimate due to scarce reserve and resource reporting from Indonesia. The slight increase in grade is caused by an influx of Indonesian new supply coming at higher than ex-Indonesian grades. So we have a decrease in the sulfide grade projects over the longer term. Turning our attention to the right-hand side of the slide, we look at the particular geographies. What you can highlight here is what I mentioned earlier, is around that grade decline, and we certainly see that in Canada. So I just want to touch on Indonesia just a little bit more. So looking at Indonesia specifically, The total 2022 nickel production from Indonesia is estimated at 1.4 roughly million tonnes. 88% of Indonesia's produced nickel comes from MPI, and the remainder comes from HPAL and RKEF. So Indonesia sits third on the cost curve. Its position is a function of intermediates and the MPI ferronickel production pushing costs per tonne towards the third quartile of the curve. So this slide should be no surprise to anyone here, but we see this is the current play of Australian producers in Australia. And obviously BHP, along with IGO, dominate this curve, which elevates Australia to the fourth largest global producer of nickel. So the total 2022 nickel production from Australia is estimated at about 180 million tonnes of nickel. 35% of Australia's produced nickel comes from intermediates, while the remainder 65% is derived from concentrates. Large portions of nickel concentrates is processed at our colleagues' BHP nickel smelter refinery. So Australia sits early in the second quartile of the cost curve. Its position is a function of intermediate and concentrate production pushing cost per tonne towards the middle of the curve. So just moving our attention to CRU's view of nickel, and I'm going to focus more on nickel sulfate because that's the demand story moving forward. If I look at the nickel within our stainless steel market, that's a 3 to 4% year-on-year growth, and that's pretty much taking us out to 2030. So like all commodities, to understand the global position and situation, we need to turn our attention to China. Over the last 18 months, we can see that domestic Chinese nickel sulfate production rose considerably. And on the right-hand side of the slide, we can see that Finland and Australia started their nickel sulfate production. So on the opposite side, we saw that that Chinese nickel imports were at a multi-year low. What we can see is Chinese imports of Australian nickel, namely briquettes, as Australia is a briquettes producer, whilst peaking in 2021, have declined slightly over the last 18 months. What this ultimately tells us is that China is becoming more self-supportive and reliant on domestic sources of sulfate supply. So now that I've set the scene on costs, production and supply, and the dynamic swings that we certainly see in the market, I want to look at the demand for nickel over the longer term. And ultimately, the CRU view is that nickel is a very strong demand drivers, which I'm hoping that everyone in this room is glad to hear. We see that demand in batteries to reach the demand of nickel in batteries to reach 1.1 million tonnes by 2026 and continue to rise in the longer term. We certainly see demand significantly increase in Europe, and as we're all aware of today, it's near on impossible to buy an EV in Europe, and the wait time is currently a year. And that's across the board, and that's also from the major brands as well. So whilst we've seen triple-digit growth within the European market, we do see that decline, but the volumes are obviously increasing. So this slide demonstrates the volume growth for battery versus stainless. And again, whilst we see a 3 to 4% year-on-year growth in stainless, when we push this out to 2030, the larger driver demand is obviously coming from battery-grade nickel. So what we're looking at here is the CRU EV forecast. So looking at the left-hand side of the slide, you're seeing the forecast for battery chemistries and the changing nature of chemistries in the forecast period. I do want to make just one point, that we are seeing considerable increase in LFP chemistry, and that's namely in China, with a 40 to 50% increase in the volume. But I will make a note that this is off a very low base. On the right-hand side of the slide, we're just looking at nickel demand by sector, and the story remains consistent. Nickel demand in batteries is the clear winner, which gets back to my earlier point that the books from autos are struggling to meet the NMC battery demand. So in conclusion, we need more supply of nickel. Global nickel sulfate demand is forecasted to rise by CAGR 23% on the back of strong demand from the battery sector. Ultimately, within our forecast, we do not see enough matte production to that to meet EV demand. We believe that NPI to matte conversion will fill demand. By 2026, global nickel sulfate demand will reach over 1 million tonnes, up from 325,000 tonnes last year. The demand growth will be met by increasing capacity both in China and ex-China. Nickel sulfate production in China will continue to be supported by increasing imports both from intermediates and NPI matte from Indonesia. A number of projects will drive ex-China nickel sulfate output over the forecast period, including the ramp-up of BHP and Terraframe's nickel sulfate operation. The inability to store nickel sulfate for an extended period and the availability of Class 1 to dissolve into nickel sulfate means that the market will not be imbalanced for any great length of time, and this underlines our forecast. NPI to nickel sulfate conversion to meet demand growth out to 2026, under our current forecast of supply of sulfate from NPI, means that there is still a need for some dissolution of Class 1 material. Thus, we expect to see a nickel sulfate price trade at a premium to the LME nickel prices. And that's it. Thank you.